each other for 1 week and all hell breaks loose. Trump and Netanyahu have decided to, well, we know what's going on. I'm not here to announce stuff that you already know. I do want to take a look at the charts, though, before we get going. This is the Trading Skills That Create Consistency webinar. We'll get onto the slides when we can, but there's some observations I'd like to share with you, if I may. As always, this is never advice. This is just purely observations. Yeah, let's get into it. First, I just want to thank you for joining me this evening. I know it's a volatile market. I'm sure there's lots going on. I'm sure you are, your attention is elsewhere, but hopefully I'll give you some value today. So let's see who we have in the room. We've got some of the regulars: Arthi, Ahmed, Alison, Andrew, Anthony, Christopher, Craig, a couple of Dominics in here, Errol, Gary, George, a couple of Georges, Graham, Humphrey, Jacko, Lana, Leslie, Lou Winthorpe, I like it, Luke, a couple of Lukes, Marius, Martin, Mateus, Michaels, Michaelos, Meinhardt, Neil, Nathaniel's just come in, Pamela, Patricia, Paul, Peter, Rhino, Richard, I've missed loads here. Sorry if I've missed you. Rob, Rhino is in the house. I said Rhino already. Robert, another Rob, Roy, Ryan, Simon, Stefan, Sue, Sven, VJ, and of course Xerxes, who was always at the bottom of the register. I'm sure when he was at school. Actually, no, if it was surnames first, maybe not. Anyway, good to have you here, guys, ladies and gents. Let's get going. Let's look at some charts, and then we'll get back to the thick of stuff. We're here to talk about trading skills that create consistency, but we can't. We often look at this when things are happening and things are interesting, and I think things are interesting. So one thing I want to mention is, listen, this is a headline-driven market, but and I think I've written an email about this, whether that's going out, it went out today, I think, is you know, we don't know a lot what's going on. Like there's a lot of stuff that's under strict control. Obviously, there's whole operation rooms trying to restrict news flow or put out what helps them, and a propaganda machine, you could say. So we don't really know. This is one of the situations where it's not like a earnings release or interest rate announcement or any of these type of things. This is, you know, stuff where we don't really know what's going on behind the scenes. We know, of course, the whole main idea is, you know, Iran's being attacked, Israel and US are doing this, and bringing other Middle Eastern countries in. UK's good. There's snippets of stuff, but fine. That's kind of just from a kind of concerned citizen perspective, if you like, or a curiosity perspective. But from a trader's perspective, how much value is that? There's probably nothing apart from maybe, you know, an announced ceasefire or an announced discussion or something, some major milestone that is going to affect the market. You know, we saw this yesterday, right? NASDAQ was rallying strong and it was shrugging off the news. Today it's down heavy because things have changed, sentiment shifted. And then, well, sorry, this morning it was down heavy, and now we're kind of rallying, and we're only 200 off being green on the day. So lots going on. Be careful that we don't push our biases too much into price. This is a time to be a pure, you know, a technician, for want of a better word. You know, there's enough opportunity, enough range in the market to, I think, just be focused on that. You know, I often talk about a reason and a bias and seeing people trapped and stuff, and kind of having maybe a fundamental shift behind it. This is a different scenario. And I've traded through these kind of different scenarios before. Sadly, you know, there's a kind of humanitarian thing here, of course, but we're talking from a trader's perspective. You know, very much it's become a pure technician. Just look at the charts, because we don't know the real news flow. We don't know what's going on. Someone may have information that is not yet fed to the market. We kind of question why a move is happening. A great one was gold, which we'll look at in a moment. Why is gold selling off when it should be a safe haven? In times of crisis, everyone goes to gold. That confusion creates opportunity. We don't know why. We're not here to question. We just trade price. So something to bear in mind. Don't get too caught up in your bias, because we are almost definitely being fed news that suits the narrative of whoever's feeding us the news, right? As we always are, to a certain extent. But I've noticed that social media has locked down quite a lot. A lot of the Middle Eastern countries have kind of stopped any people posting stuff, etc. So, and it's probably not a bad thing, is it? We can just focus on the job in hand. Okay, so I didn't even ask for a sound check. I'm pretty sure you'd all been shouting at me by now. Mark, you bloody idiot. The microphone's on mute. What are you doing? We can't hear a word you're saying. And I told you I would say, well, actually, you missed. I just was going to tell you the closing price of the S&P 500. Right. What have I got here? I've got my look at my notes. Okay. Okay. Three exciting things to share with you, which are either going to be valuable or not, right? You either trade this way or you don't, and that's fine. You know, I know everyone trades slightly differently. Let's have a look at very quickly the daily charts here. You should be able to see trading view. I've squashed it up a little bit from the main screen, so yeah, it looks all right. It's good enough. It's good enough for what we're doing, boys and girls. It's good enough for what we're doing. You know, this is, I mean, look at the position we're in. Yeah, volatility's high. This is the daily range on the day. Yeah, sure, stuff is going on, but we're still stuck where we were. We've done nothing more. Nobody is really in pain. Nobody is really hurting from a trading position perspective. It kind of looked like we might sell off really hard, but we bounced back up. We're closing, well, I don't know where we're closed, but we're right in the middle of yesterday's range. We're right in the middle of a multi-week range. We've done nothing. We have done nothing. And so be mindful of that when you step back and look at the higher time frame. Do your higher time frame work? Just look at context. When you see like the floor crumbling on the bids, and you want to smash the shorts, just remember we're not really in fresh territory to the downside yet. There's no full scale panic. Intraday, sure, it looked pretty heavy this morning, but context. The higher time frame money has to come in to get those 2, 3, 4 day moves and those persistency of trends. You can't have it from just intraday price action and algos. So when you look at your daily chart and you go, hang on a second, we haven't really done much. We've not done much. Now, sure, if we trap people today and rally from there, but even so, you know who's really trapped? A couple of intraday traders from a few days ago. We need a clear breakout. Not to say it's an opportunity, of course, it's a lovely opportunity. A to B trades, but I guess the main point is don't overstay your welcome. Like it's changing on a sixpence. Yesterday, super strong, looked like we're shrugging off news and off we go. Today, news has changed, but intraday's even shifted. So just bear that in mind. This is the same for all the major charts. Maybe we've trapped a few more here. And I think if we close at highs, and maybe that could be a springboard to push higher. But honestly, that's probably a poor idea. I think there's better ideas out there. Same the S&P. Same the Russell. We've kind of done this, but we've done this before. We need to clear some. You can see. I don't need to be a master technician to see we're still stuck in ranges. Okay, what I wanted to show you, gold sweeps. I've got on my list. Gold sweeps, you may ask. So gold, I loved this gold, but this is something to really look out for. When something does something, I'm not saying this as eloquently as I could. This is not going to come from a trading quote. When something does something, when the market does something unexpected, there's often big opportunities for us as traders. Gold was expected to rally on crap news, right? That's just what gold's supposed to do, right? It's supposed to be a safe haven, and it kind of did yesterday, but didn't do much. And today, it just had a massive rug pull. Now, watch what often happens. I don't want to kind of state the obvious and go and be Mr. Harry Hindsight here, but there's something that I want you to observe. If you're an intraday trader on gold, this is happening very frequently. Again, not advising anyone to do anything. That's the last thing I want to do. There's some observations, take them or leave them as you see fit. So very often we get this pattern where gold puts in a low, let's say it's early morning UK time, whatever that may be, so maybe it's 2 a.m., 3 a.m., 6 a.m., whatever. The next time we revisit those lows, we often get an absolute flush through. Now, this is a pattern we used to have a lot on the indices. It used to be stop hunting, and when the stops would be hunted, it would just go boom, the bids would disappear. You have a massive vacuum, and you could kind of use that as your opportunity, use that to your advantage, either by positioning short before the flush and then kind of stacking, getting limit orders ready, or whatever you like. But yeah, let me keep this rolling quickly because I want to cover the actual topic of the evening. But obviously, this stuff is pretty exciting, right? Look at this. Every time we broke that low, that 6 o'clock low, that's a huge flush there. We broke the low again. That's a huge flush. This is a 5-minute candle. It's even more exaggerated on the kind of the lower time frames. A huge flush. By that time, you kind of it would run out of puff a little bit here, and it's still a flush, but it's when you're going through these lows, you're not, especially when it's already down a lot, very often when it then goes again, it just creates this vacuum, liquidity vacuum. And, there's some big moves there, man. That's like a $40 move in the space of a few minutes. You had it Monday as well. And again, I think it also helped a little bit when there's a bit of confusion going on. So you had the low, and then when it went through that low, there was a big flush. And we've had it. We didn't really have it then, no real, because there's no low to go through. We saw it here, but it just didn't last very long. That's a pretty decent flush, right, for the context of the day. We saw it on that big sell-off as well. It's a reasonable one once it starts to get going, and not really the best. Where's that one that we had? You can go through yourself and have a look at this and just study this for yourself. This was it. So, you know, we put the early morning low in, and then we finally went through that low a little bit later in the day, even though it was still quite early in the morning. Massive flush. Then later in the day here, even though that was quite a low print, again, it went through by a lot. You know, that's a $40 move through that low. So my point is, watch out for those low flushes. I think if you're an intraday trader, there's some opportunity there. The other thing is, let's just quickly keep it moving. Crude oil last time. So last time crude oil, I wanted to find it for you and note it down. So June the 22nd, and nick this bit from Wikipedia, United States did the attack on the Iranian nuclear bunker, I want to say. Technical term, pretty sure it's something like that, right? They attacked the nuclear facilities, let's say. And the price had kind of had rallied before as a bit of a premium, and then pretty much sold off after that. Now, does that mean anything? No, but let's just remember this is when the attack happened. It was over the weekend, right? So we were kind of here. We haven't really gone much above the risk, the sort of premium plus the spike, the weekend gap risk. We tried today. And listen, oil is very, very news driven, right? If something happens with the, choking off the supply or the Strait and all this stuff, then it's going to move on its own thing. But just be aware that, because traders might be positioning one way, and if something else happens, we could have a big flush the other way. So generally speaking as well, equities respond historically. If you Google buy on the sound of cannons, sell on the sound of trumpets, see an article I wrote that has 4 different declarations of war or attacks and how the S&P 500 responded to that, and it's generally reasonably bullish, believe it or not, and that's where that phrase comes from, by on the sound of cannons, so on the sound of trumpets. So let's see. It's been very volatile and choppy at the moment, but let's see if that rings true. We need to see from a pure technician perspective. I want to see this breakout one way or the other. Final thing, I guess, just to watch out for: Aussie dollar, yen, FTSE got absolutely battered, having such a good run. It was doing so well, little FTSE. Where are you? You were doing so well, and then you got absolutely smashed. So let's see if that's worth focusing on. I don't have an idea on that specifically, but I'm watching it, and it's the same with DAX. We kind of had these European flushes, and I guess that depends on how Europe's going to get involved in stuff or not. Anyway, I spent 15 minutes. I didn't want to spend too much time on it. I could go on it forever, but you're here to learn something different. We're here to cover other additional topics. So let me switch screens for you. Let me go on to this. This all will fall in line very, very nicely in a moment. He says as he's clicking random buttons. Where's my screen share? There we go. Done. Smooth like butter. Okay, so yeah, just stuff that obviously the charts are our bread and butter, guys, right? Just some observations there that may or may not help. So trading skills that create consistency. Great quote from the late Mark Douglas here: consistency is the result of a carefree, objective state of mind. So why do I want to share? Oh, of course, jumping the gun. Risk disclaimer very, very quickly. Please be aware you're trading leverage, you're trading margin, especially in the current conditions. You can get offside very, very quickly and get hurt very, very quickly. Just understand the product and the instrument you're trading, understand how margin works, understand how leverage works. Please, please, please manage risk. Please stay disciplined. Risk only risk the amount you can afford to lose. Pull yourself out of the market when you're hitting those loss limits. All that type of stuff. Just risk management, risk management, risk management. Live to fight another day. You cannot fight another day if you lose all your capital. So live to fight another day, keep stuff small, manage risk, and obviously just make sure that the instrument and product you're trading, whether it's a CFD or a spread bet, you know how it works. I know many of you do, but there's some new guys here, and I just want to make sure that everyone is singing from the same hymn sheet. And thank you, of course, to Pepperstone for partnering with us here and being able to talk about things I think can help you in your trading. We're fortunate enough to, you know, I think what's going to help you, move forward. And you know, we've come a long way with over the years with the webinars, and we plan to do a lot more. Some exciting topics coming up. Been thinking of those. So the journey so far with this 12-week trader operating system theme that we've had for the quarter, which the idea was to kind of show you some strategies and examine kind of why, you know, good strategies fail. We talked about that. We went risk management, learning from losses. We talked about extracting lessons from losses, matching your strategy to your personality. And now we're in March. We are trying to fit these things together, because I know a lot of traders, especially if you're over a year plus of experience, you have a lot of knowledge about strategies. You have the understanding, you understand discipline, you understand, maybe you're quite good at all of it, but then there's just some things missing. So today specifically, and we're going to carry this on until the end of March, trying to form a glue that can kind of bring that knowledge and put the rubber to the road a little bit. I've come up with different skills that I believe are essential, and many of these you may have heard before, but we'll go into some depth on them, that are kind of, you know, they're not super sexy, right? You're not going to have someone saying, oh yes, this is how we do this, and this is the super skill, but it's just the reality of it. It's just stuff that, you know, all good traders and great traders do. And so, you know, if it's something that we're trying to, and you're trying to improve or trying to get to the next level, I think it makes sense to kind of to develop these and build these sort of skills. So what actually separates consistent traders from the rest? And this is my opinion on stuff as well. You know, I don't tend to know everything in trading. Yeah, I've been trading for a decent amount of time. Started in 2001, 2003 properly, I guess you could say, but 2001 sort of pretty actively. You know, and I've been through different cycles and traded through different environments, and I know lots of great traders and lots of traders who have done really well from zero, and traders who have struggled. So I've got a lot of context to bring, and some of the things that separate, you know, there's many skills out there, but the 5 main ones we're going to cover tonight, because it's not just about strategy, because even though we shared strategy, you know the strategies that I do, brand new traders know the strategies I do. I can share strategies. You can listen to strategies from, you know, mega billion-dollar hedge fund managers. That's not the key. We know it's not the key, because you could just copy that. No one doesn't work like that. It's not a win rate and some sort of special thing. Screen time helps, of course it does. It's not just that, but it's what happens as a result of the screen time, or as a result of this. What's the, you know, because it's all very well saying let's put the screen time in, and I absolutely think that is essential, regardless, getting your reps in and doing that type of stuff. But to what gain? To what's the end goal there? Sometimes it is just screen time, but sometimes we've got to work and focus on building this skill set. So I want to talk you 5 skills, and I think these are the kind of things that can really help you move forward with your trading. So, and by the way, these are more psychological things. These are the way you think about the market, the way you think about trading yourself as a trader, how you know, just how you frame and reference things in your brain, because we know that's the difference, that's the separator, that's the key. You know, if you think about what's going on from a military perspective, the commander who's seen it before, done it before, is quite relaxed about, you know, war zone is going to be a far more effective leader than someone who's brand new, which is why they kind of work their way up the ranks, right? You have to have done some military experience and have to have been out and on tours. Is it tours? Is the correct terminology? You get the idea. So, you know, we want to build this experience. So number 1 is waiting without bias. Too many traders struggle with this, and you know, we often believe that we have to have some sort of view on the market, right? And experienced traders, they're very comfortable with saying, I don't know. I really don't know. You know, I chat to Peter, who's been trading, he wouldn't like me saying this, but he's been trading longer than me, a lot longer than me. But he's, you know, we often joke and say, I don't know, we have no idea where that's going. And we don't care. Like, and a lot of things developing traders have to have a view, and experienced traders are uncomfortable saying, I just don't know. I have no idea where that's going, but I might build a view. Because a lot of traders go, now listen, if you sit down at your screen and you sit down at your desk and you've got a view, and that's based on analysis, you're like, hey, I've seen this, I know I've done this, and I've come to the conclusion that I've got a bias of being on the long side, or I've got a bias of being on the short side, I'm just waiting for my trigger. That's fine. That's exactly how you should do it. But I think a lot of the time traders fall into the trap of sitting in front of the screen saying, I'm a trader, I need to have an opinion. And you kind of go, well, yeah, it's going to go long, or I'm going to go long, or I think it should go long. I think it should rally, should I say? And here's why, and you justify it. So you might have some sort of bias that you've not really realized is affecting your or polluting your opinion. It might be some news, especially apt at the moment with stuff going on. You might be saying, oh yeah, crude's going to rally because of this, or classic, gold's going to rally because it's fear, and then just completely rug pulls on the day, you know. Confirmation, then you're kind of looking and you're trying to support the view, and the bias then replaces the process. You know, the best traders come in and say, hey, I don't know, but actually if that high gets taken out or that low, I might be interested and try and see if I can form an opinion from that. Let me wait for the next sequence. Same intraday as well. You might watch the open and go, I've got no idea where this is going, and be comfortable with that. It doesn't mean you're a weaker trader or any less of a trader. It means that you're just honest with yourself and go, it's not my edge. I've got no idea what's happening with that open. All right, let's see this. Let's leave it for an hour and see what happens. And I bet you this, you leave it and then you come back, all of a sudden, things become clearer. You say, listen, we had a massive fake out to the downside, talking about NASDAQ here. Look at this rally. Okay, a few people are trapped here. I think there's opportunities to get long and press the highs. For example, we get so caught up chopping away at the open that you don't give yourself the opportunity to. So it's okay to come in and say, I don't know, I need to calibrate to conditions. Just being very, very comfortable with saying, I do not know. Do you speak to a developing trader? And this is always how I can always tell an experienced trader from not without even asking them how long they've been trading. If I come across someone and they say, oh, I'm a trader like this, and they go, you talk about what they're trading. Normally the telltale signs, everything. So, okay, you're fine, you develop interest. Okay, there's nothing wrong with that. But it's when they say they have an opinion. You know, you say, well, are you watching, you know, Aussie dollar? Are you watching? I've got an opinion. They've always got an opinion. Someone asked me, and I haven't looked at that chart for ages, no idea. Or I looked at it and go, I still don't know where it's going. It's an uptrend, but I don't see an opportunity there. So having a view is fine if it comes from your process, but not having one. Just get comfortable with it. Just get comfortable saying, I don't know. I have no idea. It shouldn't be a problem. That should be the default setting. Neutral, no opinion. And take the pressure of having to read every chart and understand where the market's going, and have to know everything off your shoulders. You do not, right? You just do not. Wait until your edge becomes clear, right? Wait until you see what you want to see, and maybe it doesn't just suddenly go, trade me. Sometimes it does, and it smacks you around the face. And sometimes it builds slowly. You go, look at that, there's a trap been set. Now if we take our VWAP and hold that, okay, great. If we close at highs, maybe, so sometimes you can play the game of chess of saying, I don't know, but actually if we do an outside day and close at highs, maybe tomorrow sets up a nice little dip buy because of the precursor, everything. Now I've got more context. Now I have an idea, and then your bias goes in, and then you frame the trade from that. So, I just think the summary is just to be super comfortable in saying, I just don't know. I just do not know. Forget about your ego and just accept the fact that we don't know all the time. Anyone who tells you otherwise is a complete liar, because we don't. Because a lot of the time you're just not in tune with stuff. Okay, number 2 is standing aside without guilt. This is a really big one. And I contemplate, I kind of toss back and forth with some of those things in here saying which it should be the 5, should have this and that. But this was a non-negotiable. Your job is to make good decisions, not to click buttons. I can't tell you the amount of times I've spoken to developing traders who feel guilty for doing nothing, because very often you're busy. You've got a job, maybe you've got a family, you're trying to keep reasonably healthy, you've got loads of stuff going on. And so when you get time to trade, your brain says, well, I'm trading. I should be clicking the buttons. I should be making some profit. And the problem you have is that there's no correlation. It doesn't correlate like that. The more you click the buttons, actually is inversely correlated, unless you're a seasoned scalper and that's your edge and that's the way you do it. Most of the time, you know this as well as I do, the more trades you take, the worse the outcome tends to be. And a lot of that comes from the pressure to be doing something. You feel like, if I'm sitting here, I should be trading, right? You've got the opportunity to sit here, I should be doing something. And so you get into the cycle of, you bring up a chart, you have some sort of bias with it, and you support that buyer. So you have an impulse. This is the flow, right? Imagine this flow. And you may be nodding along here going, yeah, you've got opportunity to trade. You don't normally, maybe you don't have all the time in the world to trade. You slide into your desk, you turn your screens on, you got your cup of coffee there, you're like, right, I've got a few hours here to trade. In your brain, you're thinking how nice it would be to walk away with some cash in your hand. That's already the seed's been planted. And you flick up your trading view and you kind of start to flick through and something catches your eye. And then you go, oh, that's gone too far, for example. I'll look to buy that. And before you know it, you've very quickly gone from sitting down, analyzing charts, actually taking a trade. You've rushed the whole process because your brain says, I want the feedback and the dopamine hit of making profit. And so you go, it's gone too far. Maybe then you go down to a lower time frame and you go, yeah, and you take the trade. Maybe it stops you out. Maybe you never stop. You add to the trade. We know how this goes. And the whole, if we go upstream as to what's caused this, a lot of it is the desire to be active and the guilt for doing nothing. You don't have to do anything. Your job as a trader is not to do stuff for the sake of it. Your job is to allocate risk capital when you believe you have a positive expectancy, when you believe you have edge. And that little inner voice is saying, well, you call yourself a trader, you should be trading, right? You've got opportunity. You can't sit here and do nothing. You haven't got all the time in the world to sit here and always trade. You're going to miss this. You've got to go do, and that's doing, especially for those of you who are kind of part-time and doing other stuff as well. And we kind of associate sitting there doing nothing as doing nothing. And yes, you're not actually doing anything in terms of executing a trade, but it doesn't mean you have to do nothing, right? And so, you end up forcing trades, you end up doing something to make it feel like you're being productive. And actually all that does is it pushes you further and further away from the trader you want to be, because you can't sit on your hands. And I know Jesse Livermore says this, and I know many great traders from many years ago say exactly the same thing. And no one ever says be super active. Everyone says sit on your hands. But this is kind of, to me, this is unwrapping it a little bit. Why? Well, number one, because there's not opportunities all the time. But number two, the reason why we don't is our desire to have action, but also the fact that we feel guilt for not doing anything, right? We need to get rid of that. I've said this before, but I had a great interview from Jeff Bezos, right? I'm not saying we're Jeff Bezos, but the point of it was, he said he makes 1 or 2 good decisions a year, and that's enough, right? Now, that really resonated with me, because I thought to myself, yeah, we're not here to make pushing buttons. We're not here to click buttons and click. We're here to make good, solid decisions. And those are trade decisions. Now, maybe that frequency is slightly different. I'm not saying you make 1 or 2 good trades a year, but maybe it's 1 or 2 a day. Maybe it's 1 or 2 a week, right? And the rest of the time, we're not doing anything. We're not clicking buttons. It's the quality of the decision, not the quantity. And the problem is when you're overdoing it, you're doing it from a place of guilt and playing a place of, wanting to be active. You make really, really crappy decisions. A day without any trades, and you've made no money, you've lost money. It's not a wasted day, but it's, as I said, it's a disciplined one. So when you're sitting down next time and you feel the guilt and say, I should be doing something, I should be trading here in front of my screen, remind yourself you're not rewarded for clicking the button. In fact, that can send you further back. And we've all been in a situation where you click the button so many times, you're way further back than you anticipated. You came to the screen to do maybe 1 or 2 trades. All of a sudden, you dug a big hole for yourself. You're wondering what's going on, can't believe it, frustrated. That's because the urgency to trade is there. So remind yourself of your job. Your job is to make good decisions. Remind yourself what Jeff Bezos said. And standing aside doesn't mean doing nothing. So I've mentioned this before, but let's crystallize this perfectly now if we can. If you sit at the screen and you see no opportunity, your guilt will probably force you into a trade. Force the wrong word. Your emotions will guilt you into taking a trade because you haven't got that much time, or blah, blah, should be sitting in front of us. Even if you have got enough time and you're sitting there all day, well, I should be doing something. I can't be sitting there all day doing nothing. Think about having something else that's going to support your trading journey. There's multiple pillars you could work on. There's the execution, the equity curve. Great. That's the one everyone works on, right? There's the other side as well. And having it in your mind as a separate box in your mind that says, okay, well, I'm going to work on my trading, but it's not going to be from my actual trading, clicking perspective. There's other stuff to do. And that could be, I think I mentioned this one and one of the questions last week. You could read 10 pages of a trading psychology book, a training strategy book, do some back tests, whether it's kind of proper back tests with data or just going back and eyeballing charts, review your journal, update your watch list, any of this stuff, right? You make your own things up. But the point is you're transferring that guilt from doing nothing to doing something constructive. Because if you have 4 hours to watch the screen and you think you're going to take a trade and you go, you know what, I do not know, going back to the first point, and that's okay. But you know what, I'm not going to do nothing. I'm going to do something else that helps me elevate my knowledge and elevate my skill set and maybe visualization or other stuff so that I'm ready for when I do see something. So you don't have to be clicking away, because that just pushes you further and further away from where you want to be. You think about people playing football, right? They don't play matches all day long. They train, you know, whatever position they are, whether they're, you know, trading headers from a corner, whether they're training free kicks, set pieces, whether they're playing like, you know, one-on-ones. They train this stuff so that they're ready to play the match, because they can't be playing the matches all the time. So treat this as training. It's really, really useful skill, that I promise you. Okay, number 3, maybe an unusual one, you might think, but ending good days early. Whoa, before you go, whoa, Mark, what are you talking about? When I'm on a roll, I want to press it as hard as I can and make as much as I possibly can. Yes, I'm always a big advocate of that. If it's working for you, you do more, you do more, you do more, because edges do not last forever. Trust me, you have to pivot, you have to adjust, you have to adapt. But for most traders, you are trying to build, and we've discussed this before, the confidence bank and the financial bank. And you want to build both in sync. Many traders go, whoa, really crazy, and they boost a lot of cash in their account from making a few lucky trades. But without that confidence to support it, it kind of goes again. And you want to kind of build both. So some decisions that you make in your trading are for the spreadsheet or for the equity curve or for the blotter, right? The P&L. Some are for your mindset, your brain, and knowing which is a skill to develop. So, as I said here, you know, when things are working, fine, push more if you're experienced. But here's the issue, and we've all been in this situation, especially if you're an intraday trader. In fact, even if you're not, you've had a great morning, you're up, market's moving your way, fantastic, you feel great about things. And so you close some trades and you're up a decent amount. Let's say you're up £1,000, right? It's just for argument's sake. And you feel great. And what you now want to do is you want more of that. I want more. I feel great. Maybe you sit on your hands for a little bit, but then something sucks you back into the market, and all of a sudden you're pressing, and then you're down 800, and then no, I'm down 700. Oh, damn, I'm down 5. And all of a sudden, that elation and satisfaction and discipline, feeling and confidence turns to fear. Oh, I feel awful. And so you then get into the cycle of trying to get it back, which is a completely separate topic altogether. But you know, it's knowing when you're pressing too hard, right? And the thing is, think about this. You know, again, obviously depending on where you are in your trading journey, you know, I think that then this is where the confusion lies. You know, for optimal P&L, if you're on point and you're an experienced trader and the market's in the right rhythm, you trade as much as you can. You trade your edge as much as you can. There's no doubt about it. That's the way to kind of for equity growth. But for most traders, it's way better to shut things down, lock it in, and marinate in that feeling of confidence. And that's way better. If you're up $1,000 on the day, figures, just use these figures here. Great morning, edge was kind of dialed in, your execution was on point. You know, okay, what do you do now? You come into the afternoon. Do you push? Maybe it'd be great if you had another 200 quid on there, right? And you go, oh, I'll get another 200 quid. But the flip side is you give some back. And maybe you gave back 500 quid. How would you feel? You would feel awful. And so this changes as you evolve as a trader for sure, because when you're right, you know, this is kind of trying to squeeze as much out of the opportunity when it's there. But for most traders, you want to be up and gone, done for the day, and feel good about that. And that might not be optimizing for P&L, sure, but it's optimizing for here so that you're improving your confidence, so that when things aren't going your way, you look back and go, hey, I've had a string of days where I locked it in at $1,000, I feel great. You know, and maybe you got a couple of not so great days and you're giving some back, but you can draw on that strength. You can draw strength, should I say, from that higher, from that performance, from locking in the level, from locking in that, from that cash. So, you know, think about how you would feel when you give stuff back. Think about how you would feel. Would it feel that much different being up $1,000, being up 1,200? You'd feel great as a developing trader to be up that sort of money. You'd be like, fantastic. And it could be 100 quid, it could be 10 quid, it could be 10 grand. I don't care what the number is you have on there, but you know that at some point, just locking it in and saying, I'm done, is banking it, and it's making you feel good. And that is important. That's one of the skills that, you know, I think experienced traders do that. And you have to, at some time, close the platform and say to yourself, I'm done. I'm just done. The upside of making a bit more versus the downside of me losing is not worth the risk reward on me continuing is not worth it. And I say you should be pushing when the edge is there, fine, if that's the type of trader you want to be. But honestly, being comfortable, locking it in and feeling good about the day is so much more powerful for the mindset. And, you know, it builds that confidence. It builds that ability to look back and say, I had a great day there. And so, you know, even going into the weekend, like I'll speak to traders sometimes and they're up really big on the week, go into Friday, I'm like, listen, take Friday off, man. Enjoy the feeling. Go into the weekend being up that amount. Feel great about it. Come back Monday fresh. You know what you're going to get on Friday. Bit this, bit that. I wouldn't bother. It's all about banking the feeling, the emotion, because you're trying to improve that as well as obviously your equity curve. But sometimes building the confidence and the performance and marinating the feel good as a trader helps support the equity curve later when everything's lining up. So skill 4, confidence, protecting confidence as a resource. I had to include this. We've discussed it before, but it's so important, and these all tie in together as well. Consider it like a bank account, right? We've got deposits and withdrawals, and we can go into deficits. So, you know, I think last month we talked about make deposits in your confidence bank, and quitting the day early while you're up is a big deposit. Quitting the week early while you're up is a big deposit. Not trading on a day where you don't see anything is a big deposit. Saying, I got no idea this market is going, I'm going off, I'm going to come back later or set some alerts is a big deposit in the bank. Deposit in that confidence bank, and you want to boost it as much as possible, because trust me, at some point it will be drawn upon. It will be drawn upon. You'll make a mistake. You'll do something you didn't want to do. Maybe you take a little revenge trade. You know, maybe, you know, that's okay when the confidence boosted, because you can go, well, okay, listen, man, I didn't really should have done that, but I'm a human being, move on. But when you're in deficit and then you start trying to draw from it and there's nothing there, then every mistake you make compounds and it feels awful. And so really think and consider hard, you know, what can I do to boost my confidence? And it is the little things. Like, I'm doing my pre-market prep on time, 5 days in a row, great. I'm quitting the day when I'm up this amount. I'm just trying to get to this amount on the day, and then I'm done. I feel great about it. I'm trying to get this amount on the weekend, and I feel great about it. You know, what builds your confidence up? You know, great traders have understood how to manage this, and it is for sure discipline. Be self-aware, understand what emotions trigger you, what price action triggers you, these emotions, that emotions, fine. But a lower part of it is how to, you know, improve your self-talk, how to make yourself, you know, in the depths of despair and frustration when things aren't going your way, is to go, listen, look back on that month. And if you've got the confidence and you've done something that's given you the reason to have confidence there, you can draw on that, and it helps you weather the storm and come out the other side. If you haven't been quitting when you said you were going to, if you haven't been sticking to rules, then it's very, very difficult to see a way out of it. And as I say, you know, they didn't always look like great trades. You know, fine, perfect world. We both want to have a nice big fat P&L, and you build the confidence. Did what you said you're going to do. Stuck to the plan. Nice P&L. Lovely jubbly. Of course, everyone likes that. But real world, right? Real world often is things that aren't P&L related. Quitting early on a good day talks about that. Standing aside when you have no edge. I have no idea. No clue. That's fine. And then this is where you can win whatever happens, right? You come in, you look at the chart and say, I have no idea. I'm not going to trade today. The confidence you can create from that, you can either frame it as confidence boosting. That's a real mature trader decision. That couldn't see edge, didn't trade, versus actually, I feel awful. I didn't trade on the day. Oh God, you know, I should have done. I really missed out. I did nothing. It's exactly the same outcome, but you framed it differently, and it's the intentionality about that decision. Cutting the lose in the right spot, of course, it should go without saying this, right? This affects how you trade the next day, the next week, the next month, the next quarter, and that's what we're trying to do. We're not trading for today and the now. We're trying to build a skill and to get momentum that's going to carry us forward to tomorrow, the next week, the next month, if you're constantly depleting resources every day and battling away, it's not going to work. And so the final skill I've got for you, skill number 5, is what we're calling managing the narrative between sessions. Sounds complicated, but on the theme of the self-talk, which we can build from, which we can assist from, being intentional about the decisions, being comfortable about walking away, being guilt-free about doing no trading, but exchanging that for some extracurricular homework, if you like, in your trading. Any of these type of things, how we talk about our trading and ourselves between each session. If you're a day trader, if you're a swing trader, it's going to be from trade to trade, regardless. It doesn't matter. I use sessions as kind of just a reference point, but this matters an awful lot. So develop the skill of just switching off and shutting things down. I would watch markets all the time. I'd get up, watch the DAX open, watch the DAX trade up until 2:30, switch over to the US, watch that trade until 9, watch the aftermarket stuff. And before you know it, you've only got 6 hours left. Maybe up in the night checking what the Nikkei does. That's stupid. Like, I know that's a kind of extreme example, but it's not necessarily just about checking markets. It's about the self-talk here. And the difficulty a lot of traders have is many of you trade from home or home office. And so there's a lot of kind of, you have the separation perhaps where you might go to an office, you might go elsewhere, and you might have that clear. I'm out the door, shut the front door, come back, blah, blah, blah. So there's that as well, that you kind of need to find a way of switching off completely. And the trouble is, if you constantly replaying it in the back of your mind, you're kind of chatting away and you're thinking about this trade, you're in the shower, you're lying in bed, you're thinking about it. It doesn't support the next day. Now, by all means, debrief, learn from mistakes. But when you've had a really poor day or something is bugging you, you can't sit in a state of anxiety, frustration, depression, doubting yourself, because you will absolutely carry that to the next day. You'll absolutely carry that to the next day. And you're still trying to process them. And so what happens is you go into the next day and you think, what will fix this? I feel really crap about that yesterday. I feel really bad. You know what will fix it? Big fat P&L today. And so what you do is your decision-making process is contaminated by that emotion, and you try to push and you try to do stuff. And this is why this is all kind of aligned. You're comfortable saying, I don't know, I should know, I don't want to know, because if I can get a trade on here, I can undo the losses and get the money back. And you get into that vicious cycle because you ended the day poorly. Let's think about this. You're up early, let's say you're up $1,000, and you give it all back in the afternoon. And you're like, man, I feel awful. So rather than calling it quits and saying I feel good about the day, I've made £1,000, I'm going to walk off, feel good, have my dinner, smiling, and come fresh the next day, you're now dwelling on that. You decided in the afternoon to trade something you had no idea where it's going, and so you thought you're a trader. That's what you're here for. Got all day to trade. You gave it all back, and you feel awful. And through the night, all you can think of, oh man, what's up? I gave that grand back. I can't believe that. It just keeps flickering into your mind. You're doing bits and pieces, having your dinner, whatever it might be. All of a sudden, flicking in your mind, or maybe you're sitting in front of the screen trying to get it back. And so you think, oh, next day I really focus. You write some stuff down, you do this and do that, and the next day you see something. I'm going to take that because I want to get that money back. And if all of a sudden, that first decision you made not to quit when you're up a decent amount and push hard and trade something that wasn't there, and you weren't comfortable with just saying, I don't know, and you process that emotion over and over and over overnight, now has bled into 2 days, bad days, maybe 3, maybe a week, maybe a month, maybe a quarter. That might upset the whole year. It's such a fine line in trading, right? So try to get good at switching off. Try to get good at processing the day, get the useful stuff out of it, and then done. Do not revisit it. Now, of course, you might revisit it later in some sort of process where you do it weekly or monthly or quarterly, where you look back at worst days, worst trades, or particular days. Fine, but you can worry about that then. Do what you need to and close it off. Platform off, brain off, deal with the mistakes and try. Listen, I know it's easier said than done. right? If trading matters to you, it's important. You're going to feel crappy about, I've said that word quite a lot today, you're going to feel not so great about your trading, right? But you have to be able to just switch it off, go again tomorrow, go again the next trade if you're a swing trader and you have a different cadence than every day. There's a great quote, I think it was Tiger Woods. I can't remember, honestly, I can't remember the quote. I shouldn't have even mentioned it, but they were saying who's the better golf player, and I think the gist of it was, well, he is, because he's able to switch off from the previous shot. He was the guy talking to was technically a better player, but Tiger Woods was the actual better player in the overall and had the better performance because he was able to just switch off from the last shot and just restart fresh for the next shot. Didn't carry the shot, didn't go so well into the next shot, into the next shot, into the next shot. And so very much the same with trading. You can't carry stuff over. Same with positive. If you feel up and you just kind of swing around thinking you're, the next best, next Paul Tudor Jones, market has a very, very easy way of humbling you. So develop that skill if you can of completely switching off. Try to switch off and have some sort of ritual. There's a guy who used to trade from home, but he would I think he was working in London at the time. He lived in one of the suburbs, and he would get up, get dressed, briefcase, this was years ago, briefcase out the door, goes to the train station, let the train pull up, let it go out, and then he'd walk home. That would be his commute because he had done it for years, and now he's becoming a kind of full-time trader. He needed that separation, and so at the end of the day, do the same thing. I'm done for the day, close up, get my briefcase, go to the train station. He'd imagine he'd come back and imagine that he was coming back from work. Extreme, fine, but have something that enables you to switch off, especially if you're trading from home, which many of you are. Something that, right, I'm done, laptop shut, platform off, whatever it might be. You need that separation, and then maybe go for a walk, do something, because I promise you the skill of being able to switch off helps you so much, not for today, not for tomorrow, but it bleeds into kind of everything that you do. Okay, so let's just summarize what we discussed here. Again, these aren't stuff that's going to magic setups and this, but this is the stuff that moves the needle, honestly. And it's stuff that you can control as well. You can build these habits and build these skills. So I don't know is the default, and I say professional here, not from a professional trader mark perspective, but from an experienced trader's perspective, from a trader who's gone through, recognize that it's okay to say, I just don't know. I don't know. I'm going to let the market show me first. Stand aside without guilt. We're not here to press buttons. We're here to make good, clear decisions. And often there is no decision to be made. We don't know. End the good days early. For most people, that's the right thing to do. For some, push, fine. If the difference is applicable to you. Protecting confidence, man, it's so important. It's so important to have some confidence there, because you will go through rough patches. You have a great year, and then you start the year, you go, oh, no, but then it'll come back, and if you didn't have the confidence, you can end up turning that into a spiral if you're not careful. And manage the narrative, like the self-talk. Get good at kind of saying, okay, have you done? We don't have to go through this again. The day is done. I'm starting afresh tomorrow. I'm not trying to get things back. I'm being very, very careful in my process. Learn from the day, extract the value from it, close the books down, and show up fresh tomorrow. 5 skills there that I think are really, really, really important in trading. Hopefully you can see why. It just takes 1 or 2 of them to be slipping, and you go off on a complete tangent, and it can really, really, really impact your P&L if you're not careful. All right, any questions? I'm happy to help if I can. Next week, we're talking about traders' development phases. So different phases of trade development, how we're going to identify which one you're in, how to jump to the next one, what to kind of get capped off before you move to the next one, some of the signs that you might be slipping back, when it's okay to slip back, and the trap of like moving to one phase and coming back, moving to one phase, coming back, how to stop that, settle in at that phase, build the foundations to springboard you to the next phase. Thank you, of course, to Pepperstone. Go and explore their website if you would like to. Pepperstone.com is obviously their page, CFD, spread bets, etc. All right. Glance at the market out of the corner of my eye here. If you've got any questions, fire away, guys. I'll bring you over. Up 200. No, not up 200 at all. Down 200, which feels like we have had a big move, because Yeah, we have had a big move. What is the move from low to high on that today? One thing I wanted to mention to you, but we're just about time was okay. Make sure you've got your VWAPs anchored to the open. Important now when there's so much more volatility coming at the opening bell. Make sure they are anchored to there. Okay, let's bring you over here. Just a few questions this evening, maybe some more being written. This is perfect. Lou Winthorpe, you are, yeah, I should have mentioned this. So Lou Winthorpe says, I love his name, most jobs say this: don't just sit there, do something. We say to our kids, well, don't sit there doing nothing, do something productive, right? Trading is, don't just do something, sit there. What a great way of framing it. And that's the problem. At school you're told this, at your job you're told this. You do something. And actually, most of the time doing something when there's no downside moves you forward, right? If you're working in sales, make another call, do some prospecting, follow up on a lead, whatever it might be. If you're working in say on a shop floor or something, they wouldn't just stand there. We'll tidy things up a little bit, make the shelves look nice, maybe do some sweeping. There's always something to do that's going to help things slightly. The problem is when you become busy as a trader and you start to do something for the sake of it, you actually move further away from what you're trying to achieve. And so it's so important just to be comfortable. And actually, here's something that I'd like to challenge you to do. If you are a trader who struggles with doing nothing, here's a drill for you. Number one, you can download my discipline tracker if you haven't yet. But just reminding me that, go to tradersmastermind.com, top visualizing it right. Free discipline tracker helps you improve your discipline. Many of you have got that already, I know, but some of you haven't. It's there, it's free. It's a Google Sheet template, simple as that. But here's the drill: sit there and just do nothing. That's your goal. If you struggle to do that, say to yourself, my goal isn't to make money today. My goal isn't to trade today. My goal is to sit there and just watch price. And do you see how tough it is? You might crack and crumble the first time you try it. You might crack and crumble. But actually, if you can do it once, you can do it twice. You do it twice, you can do it for a week. If you do it for a week, you can do it whenever you need to. You can draw on that skill. But sometimes none of you have sat there and done nothing for a whole day. You've clicked a button at some point. So I want to say, if you're that person, you're that trader, just do that. In fact, maybe do that for me this week. For me, you do it for you. It's for you. It's not for me. I'd like to see you move forward in your training, but it's for you, right? Sit there, do nothing, and you'll have the urge, and you'll want to click, and you'll say, but this trade looks like a winner, and I don't want to pass it by. I want to make some money, and maybe you won't do it the first time. Maybe you won't do it the second. But if you can get control of your urges, and the confidence in the confidence bank dunk. If you're a trader who constantly does that, then just sitting there and doing nothing is the best thing you can do, as weird as it sounds. Just being able to just bathe in that pressure of wanting to do something, wanting to perform. Thank you, Mr. Winthorpe, for that. Okay, so another question here from Abdisalam. That's a perfect pronunciation. When trading, if I get losses more than benefits, what is the management of that case? When trading, if I get losses more than benefits. So I'm assuming you're saying if I lose more than I win, what is the management of that case? It's the journey of a trader. You are going to start, and that's the brutal truth is that's the way it's going to be for a while. Very few people that actually know anyone, myself not saying there isn't one, come straight into trading and make it work for them from day one. Your job is just to learn the craft and pay as little tuition as possible. So keep your size small, recognize losses as a part of the business. And if you're down on the week, you're down on the week, but just make sure you're not down on the week massive that you can't come back and live to fight another day. Marinus says, how you doing, Marinus? Me. Also, sometimes you just know that you should cut a trade and take profit, even though your TP is only 5 pips away. Example, I was up 95 pips today with TP at 100, price reversed, and end up taking myself out of the trade with 15 pips. Still a win. I'm glad I took myself out, albeit later than my gut told me to. How would you define this? Do you know what, Marius? This depends on what you're working on, pal. If you're working on sticking to your plan without question and you're trying to get discipline with that, you did exactly the right thing. If your job is to try to build confidence and your job is to try to grow and it's maybe not maximizing P&L, then you bank that. You know, and also don't forget the risk reward ratio, yes, of the trade becomes dynamic during the trade. All of a sudden, you now have an inverse, right? You are risking 95 to make 5, and you would never take that trade straight off the bat. Now, I'm sure you don't have to adjust every pip it goes your way, but at a certain point, you have to say, well, really, the risk reward now of the ratio of the trade has changed. It's flipped. It's inverse. I'm now expecting 5 to make 95. That doesn't make sense. Now, I might expect 5 and give back. You might say, okay, well, I'll give back maybe 15 or 10, and 5 may be a small amount, sure, but at some point you go, well, I don't want to give it all back, because why would I do that? That's my profit there. And so often the right thing to do isn't necessarily the right thing to do from the spreadsheet perspective, the textbook perspective. It's just doing something to boost the confidence. And you're up 95 pips and you go, you know what, that's good enough. Now, if you're constantly breaking rules and you're trying to do drills to stop that, then sure, you hold it. But I think that there's a trade management issue there that you probably should be ratcheting up the stop to accommodate the dynamic and changing nature of the risk reward structure. But it's part of the journey, Mariner, so you're on the right path, mate. How can I get access to the recordings? I was late signing up. This is my first webinar. Sean, welcome on board, pal. The recordings, actually, they come out. Pepperstone will send them out after each webinar, but if you have just signed up, you can go onto the Pepperstone YouTube channel. I think they've got them on there, but I think they're in a playlist. You should be able to access them all there. But it's the UK, it's the Pepperstone UK channel, not the big Pepperstone broad channel, Pepperstone UK. They've just kind of splintered stuff off. Failing that, you go to my website, tradersmastermind.com. You see every single webinar I've ever done in chronological order, and maybe you can then skip through the titles that take your fancy or not. But welcome, Sean. Thank you for joining us. Hello, Mark. This is Anthony. Hello, Anthony. How you doing, pal? I've defined a daily trade goal percentage to grow my account. I usually achieve more than that amount and transfer any extra profits out of my trading account. Good for you. My question is, should I always consider myself done trading, goal for the day, after this goal is achieved, to lock in that confidence as you mentioned? I ask because I work my salary job remotely from home while trading, so sometimes it's difficult to focus on both my work and trading. I would like to get all the opportunities, but maybe I should make it a rule to only take one profitable trade a day. Thanks for your insight. It's a good question, Anthony, and there's a lot of variables that are in play here. You know, if you are, here's the question to ask yourself. If you give back half of your profit, how would you feel? If you're like me, I couldn't care less, then maybe you do carry on trading and you capitalize on the opportunities that are there. If the market's in the same rhythm and conditions and you feel like you have edge. If the answer is, man, I'd feel pretty awful, then you stop. But at some point in the future, you won't feel so bad. But there's a level where you go, okay, and maybe it's not as binary as, well, I'm up this amount, I'm done for the day. Some traders like to do that. Maybe it's once I hit this level, I ratchet up a kind of trading stop loss on my profits for the day. Let's use that example. Let's say you're up $1,000. You go, I'm not going to go home with less than 800 quid in my pocket. And so you do it like that. And you say, well, actually, 800 is mine. Whatever happens, I've got 200 on the next trade. It's one trade already split up into 2 trades, whatever it might be. Then you can just say you're done. And there's a certain confidence that comes and satisfaction that comes and says, I'm done for the day, especially if you're working from home as well. You have other obligations, your mind elsewhere. Maybe you're on calls, maybe you're doing this, typing out, whatever, answering emails. That's always going to distract you. And so if you've made some good money for the day, I'd be very tempted to say, okay, I'm done. Don't forget, you know, you can always go back and review and say, these are the days when I was up good. What would have happened? What was the conditions like? What was, if I carried on trading, was the opportunity still there? Or was I just trying to get more out of blood out of a stone? And in reality, I was probably going to give some money back. You know, but I never think it's a bad thing to kind of be up on the day and quit when you're ahead. Now, of course, you don't want to make it asymmetric where, you know, you make 1,000, you're down 5,000, or you make 100, you're down 500. You never want that situation because that's just going to bleed you out dry. You always want to be a situation where, you know, your daily loss limit is less than your kind of typical take on the day, if you can. So you've got to do the maths with it. But at the same time, confidence. It depends where you are in your trading as well. If you need a boost in confidence, then, you know, taking one trade and banking it is probably the right thing to do. Paul says, what do you consider to be a good sustainable weekly performance in terms of R for a full-time trader? Paul, this is the framing of this question. It should be a higher time frame. you know, this, and you've got to say day, so I give you credit for that. But the problem you have is when you kind of look at it on a weekly basis, you push yourself to drive stuff hard, and listen, this is, people ask this question all the time. It depends on how much you're prepared to give back. It depends on how much you're prepared to, what type of trader you are. There's a trader I know who he always looks for 6 to 10 hour on his trades, and he risks 1 hour, of course, and he's happy to sit there and go 1 hour loss, and he maybe trades a couple of times a month, and then he kind of looks for that. But his R unit is so much bigger, right? He's risking much more of an R unit. And you've got other traders out there who are trading and going, oh, you know what? I'd be happy if I kind of made half an hour here and half an hour there, and they're kind of accumulating stuff. So, I think that the better way to ask this question is to say to yourself, how are you trading? What are you prepared to risk? And what's your objective? Because you think as well, the best traders in the world, they're not making like massively thousands. Okay, you might have a day might have a year we have a real blowout year, right? And that happens to traders in their career. They go, wow, that's pretty impressive year. But you've got to kind of take the rough with the smooth. Some months you're just not on form, and some quarters maybe just kind of break even. Just about makes that. That's just the way it is. If you trade long enough, that's just the way it is. So sustainable weekly performance. Be cautious about looking at that as your metric, because the market goes in rhythms and cycles in different conditions. And sometimes you might be like, hey, I want to press now, make 10 hour, I'm going to make another 10 hour. Oh, things are working really, really well. And other times you might be just scraping by and you're just like, you know what, this is not really the conditions for me. I don't really want to risk that much money. Sean Smith says, what are VWAPs? VWAP is a volume weighted average price. Then a whole webinar on that, Sean. If you want to check that out, go to tradersmastermind.com and there's some information. I think I've done an article actually on it. Paul says, thanks as always, your content, experience and thoughts in trading are really helpful. Dominic says, thanks Mark, great session, really valuable content. Appreciate you, gentlemen. Can you explain how to anchor the VWAP to the open? Yes, I can. And you know what? I will give you a little guide, because it'll take me 30 seconds and I would really like to help you with this question because it's an easy thing. So, okay, there's TradingView. So you just assume you're using TradingView, right? Left hand side, you've got this toolbar here, and you click on anchored VWAP, and then at 2:30 UK time, so Nasdaq have got the 24-hour session here. It's the futures contract. You could use the Pepperstone CFD, Pepperstone spread bet, regardless, whatever it is. And I find the 2:30 bar, which is this bad boy here, as it says on the cursor on the x-axis. I click, and now that is anchored to the opening print. So that's giving me a much better assessment. You can see how price is kind of hugging around it there. Much better assessment of price relative to the VWAP, in relation to the VWAP, should I say, than anything else. I did the same with DAX earlier. DAX obviously 8 o'clock in the morning. Same with FTSE. What you also want to do is you want to where is it? Where's the thing? Sorry, right in front of me. You want to click it to open. So when you're doing your Nasdaq, for example, or your Dow, let's say you're doing the Dow, let's do it fresh here. You kind of want to go, all right, 2:30, it's the opening print you want to start the calculation from. So you find your 2:30 candle and then you anchor it to that, and you can see we kind of just kissed it full rod over, and then we just went face ripper. But that's the way to. I lost all your questions. I am sorry, gentlemen and ladies. When I stop sharing the screen, I've lost all your questions, and I can't even see them anymore now. Schoolboy error. Anyway, I do apologize. If you want to send me an email, I'll try my very best to answer them. So if you reply to my daily email, it comes back to mark8@. I stopped it because I was flicking back over. Damn it, annoying. Never mind. I do apologize. Anyway, let's call it leaving there. Thanks so much for coming. We're back next week, same time next week. If I didn't get your questions, we bring them next time, or send me an email. I'll do my very, very best to help you out. Thank you, ladies and gents, for your attention. Who says that? I know exactly who says that. Right, see you later, guys. Take care. See you next week. Bye-bye.